Are we heading for a housing market crash? The market is so crazy right now with tons of buyers out and houses going with multiple offers that a lot of people are thinking that we're heading for a crash. But are they right? Today, we're going to be looking at what exactly is driving this market, what you can expect in the future, and what you can do to protect yourself no matter what happens. This is Monday Mornings with Mark. Hi, I'm your host, Mark J. Schmidt of RE/MAX Country and MoveMeMark.com, where I help you get the most out of the real estate market and your home. If you're new here, be sure to subscribe to our channel on YouTube and make sure you like us on Facebook so you don't miss out. You know, I was speaking recently with an agent who told me that they had spoken to a buyer, and this buyer said, you know what, I was going to buy a house, but now I've decided to hold off. I'm going to wait for the market to crash. And there's a lot of people who have that attitude. They think that, the market is really just so high right now. And they look back to the market that we had in the early 2000s when things really started getting crazy in the early 2000s, and how the market eventually crashed in that 2006, 2007 time period. And they say, well, it happened then, it's going to happen again. But are they right? Let's take a look at exactly what is driving the market first so we can kind of get a better idea of where we stand now and then look at how it compares to that crash back then. So first, there are three things that are driving this market. The first is there is tons of demand out there. We have a ton of buyers in the market, both people here in New Jersey who are looking to buy a new home. And we also have a lot of people coming from New York. New Yorkers have decided, hey, we'd like to move out to the country. To a lot of New Yorkers, New Jersey is the country. So they come out here and they say, you know what? We want to go and have a little more space. We don't want to be on top of the neighbors next to us. So we'll go out to New Jersey, buy a house there. That is causing huge demand. Now, on top of all that demand, we also have a limited supply of inventory. Not as many homes are on the market now as there really should be. Depending on the area of New Jersey that you're in, there are some areas where we have like 30% fewer homes on the market than we really should. So that's another huge thing. Now, what's driving that? There's a few things that are driving the lack of inventory on the market. The first is that this pandemic has caused people to want to stay home. And they say, you know what? I'm not selling my house. I'm going to stay put because I know my home. I'm safe here. I don't have to worry about going out and moving and possibly getting the virus going out to look at homes. Now, that attitude, I think, is starting to wane a bit. But that is one of the reasons that we've had such a limited supply of inventory since the pandemic started. The other part of it is fear. A lot of people are scared of the unknown, and they really don't want to get into a situation where, not just with having their, having their health put in danger, but also what happens if they lose their job. So they don't want to get themselves into a situation where they've bought a new home and all of a sudden something happens to their job and now they can't afford their new home anymore. So that's another thing that's driving the lack of inventory. And the third thing that's driving it is future homelessness for the sellers. Now, what do I mean by that? Well, a lot of times, you can put your home on the market if you're looking in one very specific area, like say you live in North Brunswick and you want to stay in North Brunswick, it may be difficult for you to find your next home. Now, if you have a larger area that you're looking to go to, that you're willing to go to, if you're looking to move out of state, it might be easier. But if you have a very limited area that you want to be in, it makes it more difficult to put your home on the market when you say, gee, that's great, I can sell my home, but will I be able to find my next home? So that's the third reason why we're seeing this limited inventory. And the third reason why we're seeing this market the way it is incredibly low interest rates. These interest rates are historically low, and it's causing a lot of buyers to come out to the market. Besides the pandemic, besides wanting to have your own place away from people where you don't have neighbors on top of you, the low interest rates are also helping. So those are the three things that are driving the market. Now, how does this differ from the market we saw in 2006 and 2007 when the market crashed? Well, the main difference is that really back then in those early 2000s, there was a lot of irresponsible lending going on. So people were getting loans that they may not have been as properly qualified for as they should have been. I remember speaking to a loan servicer. Now, this was a company actually that helped banks sell the properties that they took back, that they had to foreclose on. And this is years ago. This gentleman turned to me and he said, well, a lot of this is due to the ninja loans. And I said, ninja loans? And I'm thinking this is loans for people who are assassins in the middle of the night throwing stars. But it was not. He explained to me that ninja actually stood for no income, no job, or assets, meaning that the people who were applying for these loans couldn't show that they had an income. They couldn't show a job. They couldn't have a job verified. They had no assets that could be used to qualify them. You know, a lot of the market back then was based on stated income loans for some people. And a stated income loan is where you would tell the loan officer, here's how much money I make. And they didn't really do a lot to verify that you actually did make that money or that you could actually afford that house. So that irresponsible lending back then is what caused most of the problems that we had in the crash of 2006. Now, today, we really don't have that problem. The lending guidelines are much more strict than they were back then, and we're not just giving money and mortgages to anyone who comes and asks for it. What's really driving this market is good old-fashioned supply and demand. There's really just a ton of buyers in the market, and there's not enough supply. So when you have, remember your Economics 101 class from high school or college, remember, when you have a lot of people that want the same thing and there's not a lot of that thing to be had, the price is going to go up. So this is what's happening here. This is just good old-fashioned supply and demand. Now, another thing that differs now from the market back in those early 2000s is that now a lot of homeowners actually have equity in their homes. And a lot of buyers are coming to the table with money to put down. So they're getting into a home, they have some equity in that home as soon as they buy. It's not a matter of like we had years ago where people would do 100% financing. Someone would get a loan for 80% of the value that they were purchasing, and then they get another loan for 20% from the same lender. They'd have 100% financing, and in effect, they had zero equity going into that house. We don't have that problem now. Most people have equity, and even homeowners have more equity in their homes. This market obviously has been rising over the past year. I've heard counts that the market has risen 10 to 12%, depending on who you listen to. But back in those early 2000s, a lot of homeowners were kind of using their homes as piggy banks or as ATMs. And they were doing cash out refis, meaning they would refinance the mortgage on their home and pull the cash out of it. So when you pull the cash out of your home, you have less equity. So if something goes wrong, if the market takes a dip or what have you, like it did back then, all of a sudden now you're sitting with negative equity. Your home is now worth less than you owe on it. We really don't have that problem now. Thanks to these stricter lending guidelines and just the overall tenor of the market, people aren't doing that anymore. They're not doing as many cash out refis as they were back then. So that's not really an issue that we have to deal with. So what do I see happening in the market moving forward? Well, now that we're starting to open up from the pandemic, when the pandemic hit, everything shut down, people lost their sources of income, and it was a little tough out there. But now that we're starting to open up, we're going to see a few things happen. The first is that we're going to see more and more people going back to work. And those people going back to work is going to cause more people to come out into the market to buy a home. Now, they may not be looking for a single family home. They may be looking for a condo or a townhouse. But I do think that going back to work is going to get more people out into the market. Now, at the same time, the opening up is going to cause more homeowners to come on the market. So the homeowners who are thinking about selling, they're now going to say, hey, you know what? The pandemic is easing. I feel better. I think we should put our home on the market and make our move. Some of them will be looking to move locally. Some of them will be looking to move out of state, which is good for the people here who are looking to buy something. But that's going to cause more homes to come on the market. So because of these two things, I don't see the market coming to a crash. I think the market's going to slow down a bit. It's going to maybe ease off. But we're not expecting a crash. I just don't see a crash happening. We definitely don't have the same fundamentals that we had a problem with in those early 2000s that we do now. Things are a lot different now. And like I said, this is supply and demand. We're going to see that we're going to start having more supply. The demand might even ease up a bit, but it's just going to even up and things are going to get a bit more normal. So here's my advice for you. If you're thinking of buying a house right now, go for it. Interest rates are historically low. And remember, when interest rates go up, they lessen your ability to buy a house. They lessen your buying power. So when you buy when interest rates are lower, you have more money that you can spend. So with that being the case, whatever you're looking to buy, make sure it's the right opportunity for you. Even if you want to go above asking price, just make sure, with your agent that the comps make sense, that you're not going to be going too far over asking price. You have to make sure it's going to be something that you're going to be comfortable with. And also you should make sure with the seller of the home what you're willing to do if the home does underappraise. Are you going to want the seller to reduce to the appraised value? Are you going to bring money to the table to add to your down payment to make that deal go through? There's a lot of different ways you can do that. So just make sure you think about those things before you actually get into that situation. Before you sign that contract after your offer is accepted, make sure you're all on the same page so you don't have any surprises. Now, if you're thinking of selling your home, I know for a fact that the market is super hot right now. So if you're thinking about making a move and you're a little bit nervous, do your research. One thing I like to do for my clients, I like to come out, talk to you about, what you need to do to get your home ready to sell, kind of share with you what your home is worth in today's market and what you can expect to get for it. I run comps, comparable sales for my clients. But that only tells part of the picture in this market. Nowadays you can put a home on the market for one price, but wind up selling it for more. So we can kind of talk about your options. But what you want to do is get all your ducks in a row. Make sure that you know what your home is worth. You know what you need to do to your home to get it ready to sell. And where you're going to be going next. If it's something out of state, for example, I met with some clients the other day. I'm going to be getting their home on the market. They want to move to Florida. I'm going to find them an agent in Florida they can work with so they have no problems as they make that move. That's definitely something I can help you with. Or if you're out of New Jersey, I can help you with there too. In any event, do your homework and you will have a fantastic move. Now listen, whether you're thinking about buying a home or selling a home, there's a fantastic resource that you should definitely take advantage of. It's my website. You can find me at www.MoveMeMark.com. Thanks so much for watching. If you missed our last episode, I've got it right here for you. And here's another episode that YouTube thinks you should watch. If you haven't subscribed yet, make sure you hit that circle and subscribe so you don't miss out. And I'll see you next time for more Monday Mornings with Mark. You have a great week.